Ladies and gentlemen, good day and welcome to the Subros Ltd Q1 FY2024 post-results conference call hosted by Concall Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity to ask questions after the presentation concludes. If you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is recorded. I now hand the conference over to Mr. Annamalai Jayaraj from Concall Securities Private Limited. Thank you, and over to you, sir.
Thanks, Susan. On behalf of BNK Securities, welcome to Subros Ltd 1-2 FY2024 post-conference call. From Subros Ltd management, we have with us Mr. Pramod Kumar Dugal, Executive Officer, Mr. Hemant Kumar Agarwal, Financial Officer and Vice President Finance, Mr. Sigvinder Singh Gill, David Finance. I now hand over the call to Mr. Pramod Kumar Dugal for opening remarks to be followed and answer session. Over to you, sir.
Thank you, Jayaraj. Good evening, ladies and gentlemen. Warm welcome to you for Subros investor call for Q1 FY2023-24. Q1 of FY2024 has been a very mixed realization for us. This quarter, sales are less than the plan because few OEMs continue to face the electronic component shortage, particularly in the models in high demand. The company has clocked a sales of over 694 crores. There is a 13% growth in automotive segment, whereas in overall revenue there is a 2% degrowth, mainly contributed by home segment, where sales are muted because of climatic conditions. There is a positive trend of profitability improvement, though there is a small improvement. In addition to that, there are significant development in the industry. I need to update a recent government initiative with an announcement of mandatory truck cabin for N2, N3 vehicle categories to be air conditioned. Feature of air conditioning of truck cabin is necessary for providing comfortable working conditions for the truck driver, thereby improving their efficiency and addressing the problem of driver fatigue. This notification was originally notified in 2017, the date of implementation of January 2018, wherein air conditioning for N2 and N3 category was made mandatory. However, due to OEM representation, it was diluted to blower or air conditioning as optional. Now we welcome government initiative to revise this notification. At the current situation, since this apply to N2, N3 category of the truck, so the estimated volume of this category will be approximately 4 lakh trucks. So estimated market size would be around 400 to 450 crores. Since Subros was preparing for this implementation since 2018, so our product range is almost ready and our engagement with all major OEMs is already there. Customers have already started aircon fitment in the truck as optional market. So far, it is successful because gradually this percentage has increased from 4% to almost now 11 to 12%. So this would be incremental business opportunity for the company, and we'll update the progress in the subsequent quarter. Coming back to the results for Q1 23-24, we have shared with this results with the stock exchange and also posted on our website. Let me elaborate these results one by one. I'll update about the industry relevant for our business. This quarter, the passenger vehicle industry has shown a growth of 7% on production basis as compared to the corresponding quarter of the last year. Whereas Subros PV segment thermal product growth in Q1 is 9% in comparison with the corresponding quarter of the last year. So our performance is slightly better than the industry performance, mainly because of the model mix. Commercial vehicle bus is also improving because of the tourism sector and public sector revival. AC fitment ratio in buses has also improved. The industry has shown a total growth of 40% on production basis in comparison with the corresponding quarter of the last year. Our growth in this segment is around 11% as compared to the last year. For the commercial vehicle N2 N3 category, the industry has shown a negative growth of 4% in quarter 1 as compared to the corresponding quarter of the last year. And we also followed the similar trend as compared to the last year. In home AC space, we have muted our effort for home AC products, business extension, just because of very high impact of the commodities, which was not compensated by our OEMs. So we were going slow on home AC order booking. And unfortunately, this year the climatic condition is also not favorable to this industry. And most of the OEMs are ended up with huge stocks in their warehouses. So during the quarter, total turnover realized from home AC aircon is just 2.2 crores. We will be watchful for the softening of commodity prices before we aggressively pursue this business again. As I mentioned, revenue from operation is around 694 crore in this quarter, as against the corresponding quarter of 708 crore, overall 2% negative growth here. Our share of business in passenger vehicle air conditioning market is retained 40%, and share of business in truck market has improved by 1%, now 43% as against 42% last year. And bus segment also we retain the share of business at 20%. Now I'll talk about the operational performance. Profitability has improved a bit as compared to the corresponding quarter. There are continued challenges in supply chain due to the global increase in demand, which has started experiencing in the last 2 years. Commodity prices and logistic cost escalation and foreign exchange escalation has impacted on the margins in previous 2 quarters. So the trends have started softening, and which has started reflecting in our financials also. Company has realized a EBITDA of 48.8 crores in quarter 1, as against EBITDA of 45.35 crore in corresponding quarter. So if we compare EBITDA with the corresponding quarter of the last year, it has improved by 8%. And if we compare as against the previous quarter, quarter 4 of 2022-23, it is lower by 14%, really because of one-time other income booked in quarter 4 of FY2022-23. Profit before tax in quarter 1, 23-24 is 19.78 crore, which is 2.8% of the net sale, and this has improved by 14% as compared to the corresponding quarter. Profit after tax in quarter 1, FY2023-24, 13.46 crore, which is 1.95% of the net sale, and this has also improved by 18% as compared to the corresponding quarter. So overall summary, revenue of 693 crore, EBITDA of 48.8 crores, PBT of 19.78 crores, and PAT of 13.46 crore earned during the quarter 1 FY2024. Now update on the business side. As I mentioned, quarter 1 FY24 performance has started improving and registered overall growth in EBITDA, PBT, and PAT. Even though there is a slightly drop in the sales, our efforts are consistent to grow in double digits during the year, and still our plans are aligned to that. We continue our efforts in terms of improving the margins through the localization and cost efficiency improvement, and we'll try to recover this very quickly. Localization focus to de-risk ourselves from the global cost pressure. I've been updating the forum for last few quarters. It has started improving. Now 16% of our total revenue is the import content, and we have a target to bring it below 10% in next 2 to 3 years' time. There is a significant success in new business from our customers. Business lineup for up to 2025 is almost completed, and this will ensure our sustainable growth in future. Thermal business in alternative fuel is our priority, and we have secured business of almost 15% of our turnover business coming from either hybrid or battery electric vehicle or CNG. Two new launches where we are part of supplies. Mahindra new tractor, the collaboration with Mitsubishi, and M-Star tractor for the US market. SOP of M-Star has already started. The trial run for Mitsubishi tractor also started now, which will be in SOP in subsequent months. We have also started SOP for Maruti Jimny and Fronx from our Manesar and Gujarat plant. And we see a very good response of these launches, which will help in growth journey for Subros. Product for EV thermal space for the upcoming model of Maruti is also under development with the support of Denso. And we also secured a major hose and pipe business of Mahindra and Mahindra future EV platform. These are 4 platforms for which we got the business. It has a value of approximately 90 crore per year, but it will be a gradual ramp up every year starting from 2024 next year. So for that, SOP preparedness is also being done from our Pune plant. Thank you very much, and now we are ready to take questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants requested to use handsets asking a question. Ladies and gentlemen, we will wait for a moment while the question assembles. First question is on the line of Ashin Modi from Equirus. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question is regarding this truck AC thing. So you have told that this will be a 400 crore sort of an opportunity industry size. Could you please tell us, given the current what is the size right now, and is there a scope of market share expansion in if the industry shift towards truck ACs? And also, if you could help us understand the margin being lower than ACs, that would be a question.
So you have 3 questions. One is that what is the incremental market? Second is how this mix is going to be, and third, how the margins are comparable to the existing. Correct?
And so do we have a scope of market share increasing? So we have around 45% in market share in trucks right now.
Okay. So as I mentioned, this overall industry would be around 400 to 450 crore by the time SOP will starting. That is a full year of FY2023-24. Right now, since the blower is mandatory and AC penetration is as optional, around 10%, so total market currently is around 135 crore. There would be incremental market of 285 to 300 crore as this notification will get implemented. So the early mover advantage for us is that out of this 15% optional share, which is currently mainly dominated by Tata Motor or Ashok Leyland or Mahindra. So we have already product lined up and we are already supplying. For these products, the conversion would be from 15 or 10% penetration to 100%. So that would be incremental revenue for us. Second is pitching to other customers who were not right now only on a blower. So that engagement is also on, and we are trying to give them off-the-shelf products so that the implementation can be faster. The market size, since we are already at 43, we are intending to increase it to 50 plus as this conversion will happen by January 25, mainly because of the product availability and the readiness, which is already planned a few years back. So we are confident that we'll be able to get up to that number. As compared to margins, so they are more or less comparable to passenger vehicle segment. There is no much difference because products are more or less similar. Only the size and the capacities may change based on the engine or having capacity, but otherwise they are comparable.
Okay, thank you. And my second question is regarding the gross margin. There's a significant improvement in our gross margin. So is the commodity price pass-through and the other price pass-through we were talking about, are they more or less in, or do we expect to improve from here on as well?
So, see, the trends were on the upside, and we mentioned that since we are getting partial compensation or there is a lag or because of denominator or numerator remains same, margins were almost sinking on at that time. Now, since the commodity and forex prices are softening, so that means the impact will be on the reverse side. Also, the effort of cost improvement over the period of last 2 quarters, where we specifically pursued this cost reduction, has also contributed positively on that. So we see from here onward, trends should be improving only.
And so my last question is regarding the we are building compressor for strong hybrids and EVs. So is there any development over there? Because it's a higher ASP product better than normal.
So still this feasibility is ongoing because it's a very large investment, and we have already engaged with customer to finalize the specification, because EV market in India is still evolving. Still the specification for vehicle segments are not very sure. That engagement with customer has already progressed, and we are trying to finalize the specification, which will be finally executed from 2026 onward. Based on the final configuration, we will decide the product launch strategy. Discussion with Denso and TICO are on, and we are progressing well on that. So as and when we conclude officially on that, we will update market.
Thanks. I'll join back this. Thanks, sir.
Thank you. Reminder to the participants, anyone wishing to ask a question, may please press star and 1. Next question is the line of Abhishek from Dollars Capital. Please go ahead.
Thanks for the opportunity. Sir, if you can provide revenue breakup in terms of the passenger vehicle AC, CV, REC, and home AC for quarter 1 FY24.
So overall breakup out of this 693 crores.
The person you are speaking with has put your call on hold.
Hello.
Yes, sir. Please proceed.
Okay. So overall breakup of this broadly 693 crore is 490 crore is coming from 543 crore is coming from passenger vehicle aircon. Radiator ECM is around 100 crore, and rest is from the other side.
Okay, sir. And how much revenue was from the commercial vehicle, especially what was that categorization in terms of the CV in trucks and buses?
So overall truck, buses, etc. would be around 30 crores.
30 crores. Sir, as you mentioned that your market size in the market size would be around 5 billion. OEMs only, or what would be the aftermarket revenue? CV would be mandatory, if it would be mandatory in the CV.
So aftermarket is excluded for that because there is no clarity right now for aftermarket retrofit implementation. So if OEMs will be supplying the mandatory AC-fitted cabins only or through Concall as a separate kit, right now aftermarket is not included in this projection.
So assuming your 50% market share, we can expect around incremental revenue of the 2.25 to 2.5 billion from FY26. Is it right, sir?
So this would not be incremental because 450 would be the total market if we take 50% to 5. And right now also we are doing around 50 to 60 crore rupees as part of the blower supply. So I'll take increment between 150 to 160 crore.
And what would be the margin of this particular business?
So similar to the PV. So it is comparable to the PV.
And is there any requirement for capex for this business, sir?
No, it will not be a substantial capex. Investment has already been done. Very small capex of 5 to 7 crores will be only for the tooling development if required to execute the numbers.
And during this quarter, we have seen a very sharp jump in employee and other expenses. Is there any one-offs in this quarter?
Which expenses you mentioned?
Employee and other expenses.
Hemant, can you update, please?
Yes, can you repeat the question, please? So, in this quarter, employee and other expenses has been sharp jump. Is there any one-offs?
So sharp jump is because if you see the lower sales, which is contributing in terms of percentage, and second is the salary and the wage revision for the beginning of the year.
Okay, so on full year basis, what kind of the employee expenses growth can we assume, sir?
For the full year, or the question for the full year?
For full year.
For the full year, the stock cost will remain in the same as 67 multiplied by 4, approximately 250 crores.
Okay, so run rate is sustainable.
Yeah, Abhishek, the point is that in normally employee expenses, there are two variable elements. One is as the sales growth will happen, there will be certain direct manpower which will be directly proportionate to that. And second, between 8 to 9% is the annual incremental rate which we normally apply on an average to the overall employee spend. So these are only variable factors which will be applied subsequently.
Okay. And my last question is, what would CapEx plan for FY2025?
For 23-24.
Sorry, sir?
Which year you are referring to, 23-24 or 24-25?
24-25, sir.
Subsequent year. So it would be, other than if we go for a strategic investment for electric compressor, minus that, it would be in the range of 100-110 crores.
Okay, so because of the capacity additions of the Maruti plant?
So it would be for the capacity expansion relevant to that, because Maruti plant, if we understand, it will be gradually ramp up. So 240,000 multiplied by the number of lines in subsequent year will happen. So we will also grow gradually into that expansion.
Okay, sir. Thanks. That's all from my side.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Varun Arora. Please go ahead.
Hello. Hi, sir. So, if you can give a view on revenue generation from the track segment, since you have started to supply to US right now.
So, this tractor extension, what we lined up with Mahindra and Mahindra for Mitsubishi collaboration project would be full matured volume would be around 30 to 35 crores. And this US market, which is M-Star, would be another 10 to 12 crores. So this market as a matured number would be between 35 to 40 crores where we see future growth in this.
Approximate crores for the year you're selling.
No, total 35 to 40 crores for both M-Star as well as K2.
Okay, sir. And what in Q1 do we have any sort of revenue from that, and what are you expecting from the Q2 from this tractor?
The SOP has not yet started. It is still to start. So M-Star has started in the month of July only. K2 would be starting in the month of December. So right now the numbers are very small. It is just 2 crore rupees from the truck segment, tractor segment. It will grow as these two major SOPs will start.
Okay, sir. Okay, sir. So on that plan, so Maruti is bullet capacity 1,031.
Mr. Arora, we are unable to hear you clearly.
Yeah, am I audible now?
Yes.
Okay. Yeah, so on that plan, if you can tell me about Maruti. Maruti is looking double its capacity at the 2001. So what's your plan on that? Will you be able to do that? I mean, by that time? You can just put some colors on that.
Maruti has indicated one partial plan to that, although they have already announced that they will be going up to 4 million of capacity right now between 2.5 2 million or 2.3 million to 4 million. Only the clarity which is given to us is that Kharkhoda project which is in Haryana. So our effort right now is only for that extension. Another extension which is yet to be clarified is we are not planning for that so far. But for Kharkhoda, since this extension is spread into 4 years, which is a multiplier of 2.4 or so, 1 line extension every year. So we are aligning to this extension roadmap, and accordingly the incremental investment is also spread into gradual 2 to 3 years time.
Okay, sir. Okay. I'll come back in. Thank you.
Thank you. The next question is from the line of Abhishek from Dollars Capital. Please go ahead.
Thanks for the opportunity again. So earlier, your margin, which is used to be around 10 to 11%, now it has come down to 6.8%. So what's your near to mid target margin? Given that this quarter we have seen a sharp jump in the gross margin, there was an impact because of the negative operating leverage. If we assume that passenger vehicle growth that will be strong going ahead, then what kind of the margin you to make in coming quarter?
So Abhishek, this EBITDA margin of 10 to 11% where we were before COVID period, our first attempt would be to regain that target. So whether it is short term, within a year, 2 years, I'm not putting a timeline to that, but yes, we need to recover back to double digit. That is our first approach to recover. And beyond that would be depend upon how the segment growth will be. So right now we see car segment growth is quite prominent, and we see growth potential in next 3 years time. Of course, there are discussion between EV, hybrid or IC, which one will grow at what pace. That's the only differentiator. But yes, to compensate that disruption, truck market would be a add-on thing for us. If we realize the target number of, as I mentioned before, of 50% share of business, definitely it will give much better growth, top line growth also, as well as on the bottom line also.
So what would be the closing margin for FY24, and that your mix is improving because that revenue from the home AC segment is going down and revenue from the passenger vehicles is going up. In that case, can we expect that margin would be around 9 or 9.5% in the coming quarter?
So Abhishek, it would be inappropriate for me to put some numbers which are projected or based on certain market risk. I will not be very explicit on exact number, but I can only assure you that it would be better than the last year. It would be gradually better than the quarters which we have already completed.
So gross margin, we have seen a very good improvement in this quarter. Will this be sustainable, and can we expect the further margin improvement in gross margin front?
If there is no global disruption further and economy is more sustainable, yes, it is. If there are unforeseen disruptions, then there would be a slight risk on that.
And in this quarter, you also mentioned that you got the benefit of the forex. So will it be sustainable in the coming quarter, and what were the benefits in the first quarter?
Hemant, take that please.
Please, on foreign currency, what's the question?
Yes, sir. I think in presentation you mentioned that margin was benefited from the forex movement in this quarter, so it was favorable for you. So just wanted to understand how much was the benefit and how much it will be sustainable.
So, see, sustainability की जहाँ तक बात है, as you know, it is back-to-back reimbursement from the customer on the quarter lag. So sometimes quarter lag impact is positive, sometimes quarter lag impact may be negative, which is totally driven by the currency movement with the external factors. Okay, so if you see the quarter 4 impact is in Q1. So quarter 4 currency rates were high. Now currency rates has come down. Yeah, yen, who was at 61 in the quarter 4, now it is at 58, 59. So when you will get a reimbursement from the customer at our say 61 and cost is 58, 59. If you talk about second quarter is neutralized because it's a constant currency movement in the second quarter. So your cost and the revenue is matching.
Okay, sir.
So it is very difficult to say what is sustainable because it is sustainable. It may only impact with a quarter lag. On a yearly basis, it will get subdued.
Sir, in the radiator business, how much the growth in this quarter and what is your revenue target for 2024 and what would mix in terms of the passenger vehicle and tractor?
So in radiator business, last year we did around 390 crores. In this quarter we have done around 108 crores totally. So we are expecting that this year will be closing around 450 to 460 crores on the ACN. There would be growth of almost double digit here. When we add tractor heat exchangers also, which will be in subsequent year, this number will be growing, and I think mature business of radiator will be able to talk around 500 crores.
Okay, sir. And in this quarter, basically in home AC we have done only 20 crores. So last year we had done around 85 crores. So we are able to cross the last year number, or we'll see the growth in this year in the home AC channel?
Just to correct you, Abhishek, this year we have done just 2.2 crores of home air con. Last year business was on upside where there was a lot of pressure on the bottom line because of the commodity escalation, which was not compensated, and we struggled on the margins last year. So deliberately we have taken a call not to pursue this business more aggressively unless we get a back-to-back compensation from customer on all the escalation. So we are just waiting for this industry to soften. There is no issue in demand side. It is up to us how and when we want to pursue this business aggressively. So of course, it will not be comparable to the last year. That is for sure. We'll see how we are pursuing this.
Can we expect this year home AC would be washed out because of this problem you are facing because it's on the margins? So most probably that revenue would be around in the range of 10-12% only.
Yes, it would be around, I'd say, less than 20 crores, but we'll be watchful on that business development.
Okay. And my last question is on this: how much the gross and the net debt of the company at this point of time?
Net debt, gross debt or net debt?
Yes.
Hemant?
So long-term debt is very negligible. It will get 100% by the next year. It is only 10 crores. Yeah, working capital limit definitely we are using, and utilization of working capital is approximately 50 to 60 crores.
Total would be around 7 crores.
Yeah, total 70 crores. So the long-term debt will get repaid by end of next year, and working capital will continue.
Thanks, sir. That's all from my side.
Thank you. The next question is on the line of Neil Doshi. Please go ahead.
Hi, sir. Questions from my end. So firstly, can you please share some color on that you are manufacturing the EVs and hybrids in the PV section? And also, in your opinion, which products are higher margin products and where we see the major growth coming from?
Mr. Doshi, your voice is a bit heavy. Can you be slightly away from the mic, please?
Yeah. Is it audible? Is it better now?
Yes.
Yeah. So my first question was on if you can share some color on products you are manufacturing EVs and hybrids in the PV segment. And also, in your opinion, which products are higher margin products and where we see major growth coming from? That would be my first question.
For the EV, as I have been mentioning before, for thermal products, there is not much change other than some routing and certain electronic parts which are getting introduced. So EV, EV or hybrid, we are supplying HVAC, we are supplying radiator, we are supplying condenser, hose and pipe, compressor. It is used electric. Right now we are not there because this product profile is not with us as of now. But that's what I mentioned, that we are working to localize this compressor going forward. In terms of margin, they are not very significantly different, but yes, since these are new technologies, for certain new technologies, there are slightly higher realization from the customer, mainly because of the amortization and the investments. So going forward, this will also neutralize because there are a lot of pressure on the OEM to reduce the price difference between IC to EV or hybrid.
Okay. And my second question was on the localization. So we have recently been focusing a lot on localizing our products to reduce the local dependency. Okay, here you share some details on what kind of cost savings we could accrue on manufacturing products domestically.
So for last 5 years, we started this journey for localization push, and we were around 30% of the total revenue was import, and now it is remaining 16%. So we have seen there is a substantial value add when we localize in India. Of course, one, there is a duty impact which is utilized here. Second, cost of manufacturing in India is slightly better as compared to Japan and Europe. So now going forward, we have a target to reduce the import spend by another 6%. Of course, there would be certain investment initially, but there will be on long term, there will be a benefit coming into us. So I can say around 8 to 10% is the net benefit of through localization.
Okay. That's all. Thank you.
Thank you. The next question is from the line of Annamalai Jayaraj. Please go ahead.
Yeah, I have only one question, sir. Any update on railways, sir?
So yes, railways, today and tomorrow the approvals are finally going on. So we are expecting this approval will be completed by this month only, within the month of August. Based on that, now the product readiness is almost concluded. There are few tenders which are in pipeline, which will be rolled out in the month of September, October, which are very large tenders, and if we are successful in picking these tenders, of course, we will have a very good start in railway business to progressively pursue.
Earlier we had target of 100 in railways.
I'm not changing my expectation. Of course, now since product performance is very good, we expect these numbers to be realized. Only catchy point will be when. So as the government will increase now, that there is already effort from the government side for aesthetic improvement and renovation of all old coaches, and also this Vande Bharat also is very aggressively launched. So we see these numbers happening in a short and long term.
Get this order, the execution will start from current year or next year, sir?
So it will start from maybe February onward, gradual, but next year will be the full impact because I think the tender duration would be around 15 months or so.
Okay. And other than now railways, any other, non-auto, we have been saying few other things now. Anything working out?
At this stage, no, because first we need to stabilize whatever we have, because lot of disruptions, lot of capacity expansion, and lot of new technology expectations from the OEMs. So first we need to fulfill these all expectations before we start pursuing to other ventures.
Okay. Thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
So, as summary, what I say is that there is some positive trends coming in now. Market is showing very positive sentiment. Recoveries are expected very soon. FY2023-24 is looking very promising. We are still maintaining that we will do a double-digit growth this year. Margin side also, there is some positive trends now appearing. Quarter two definitely is very aggressive, and we see better growth as compared to quarter one. So this is the only comment I have at this stage.
Thanks, sir. Thanks for that.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Batlivala and Karani Securities India Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your line.